The stock market is actually green today by about 0.5%, which is pretty unusual these days. It's been a non-stop slew of red days, sending us to new lows for 2022 after a brutal 10 months in the stock market. Now, here in this video, we're going to talk about this situation with AMC, how AMC warns short sellers of possible APE short squeeze, what kind of effect that could have on AMC, and potentially how high AMC stock could go in the event of a short squeeze here over the short term. And there's really two different ways this could play out. With this whole situation with APE and AMC, by itself, that could cause some degree of a short squeeze. But what if you get a positive bullish reaction in the markets? That's the other side of this, where you could get good news, a event which causes shorts to start covering on their short positions at a time where the broad market dynamics change, and that could really set us up for a larger short squeeze. Just how high could we go? What could happen? We're going to get into that here in this video. We're also going to talk about the good news for the day and the reason why the stock market is up 0.5%, because there is some deliberate good news today that is a fundamental change for the stock market as of right now. And tomorrow, you do have some major data that is coming out that will again move the markets in a bigger way. And I expect tomorrow's move to be even bigger than what we are seeing today nonetheless. So let's get into this information, guys. First things first, AMC stock at the time of recording this video is down about 2.69%. Not a surprise. Shorts, they're going to take that advantage every time they can to short the stock, because after all, some of the best performing hedge funds in 2022 are computer driven, and that's what we know, or who we know, I should say, is shorting AMC stock the most. It's the computers, and that's why the stock just continues to get beaten down. The short interest continues to increase on AMC, APE, and also why you are getting so many FTDs on AMC and APE as well. But nonetheless, we'll circle back to AMC. Let's talk about the data that did come out today. So we have this: inflation expectations ease while spending outlook tumbles, Fed consumer survey shows. The key point says consumers expect the inflation rate a year from now to be 5.4%, the lowest number in a year, and a decline from 5.75% in August, according to a New York Fed survey. Respondents also indicated that they see household spending growth of 6%. That's the lowest level since January and the biggest 1-month decline ever. So this is showing people starting to expect inflation to ease up a little bit. They're also expecting to spend less money, which goes hand in hand with what inflation is likely to do. That's why these surveys can move the market so much, because if people expect inflation to be, 5 or 10%, whatever the number is, they're going to work that into their raises with their employers, right? Their unions are going to bring that to the discussion table when it's time to renew contracts, so on and so forth. A lot of trickle down effects of expecting high inflation. But long story short, if people expect high inflation, it tends to happen. If people start to expect lower inflation, that's what tends to happen. That's why the markets really are going to love these surveys when they show consumer expectations for inflation going down. And that's what we did get today. And that's really the nutshell of what's happening today, why the markets are up 0.5%, give or take, by the time you guys see this video. What we have for tomorrow is going to be a little bit bigger, and the first thing that we have at 8:30 in the morning is PPI month over month for September, producer price inflation. Obviously that's key because the inflation producers see tends to get passed on to the end consumer, thus meaning more CPI or higher headline inflation, just higher prices in general. So that's what we have first things first in the morning. Finalize whatever trades you guys want to make on this initial move, because I imagine it's going to be a 1-2% up or down move tomorrow. And then at 2 p.m., you have the FOMC minutes. Usually this is a big reactionary catalyst. Usually you will see a big reaction from the markets when this comes out at 2 p.m. But you don't really get a huge follow through on this usually because it's past information. It's essentially the reason why the Fed raised what they raised at the last meeting, right? It's the transcript of the last meeting. So you can kind of get a sense of where people are aligning, what Fed speakers, or Fed members, I should say, voted for this or why they voted for that. And you can start to get a feel of potentially the division. Hopefully we start to see that division between some Fed speakers or Fed members wanting to go, 75 basis points or 1% for the rate hikes, or people that want to go 25 basis points or 50 basis points. That's what the markets are going to be looking out for the most. And that's what potentially could give us a bigger follow-through event with the FOMC minutes. Maybe. Usually it doesn't cause one of those follow-through events, but this time around might be a little bit more important, especially because then on Thursday, you have CPI that comes out at 8:30 in the morning. That's going to be the main catalyst of this week because it's the last CPI report we get before November 2nd, before the Fed raises rates. And this is going to be the last time the Fed will raise rates before the midterm election. So historically, there's a bullish reaction after midterms. And right now, there has been quite a bit of division between Fed members, the World Bank, a lot of other central banks that are saying the United States needs to slow down raising rates before they break something. There's been a lot of that division, which is a good thing for the stock market, right? You don't want all Fed members, being, we need to raise rates 1% every single meeting. You want to start to see that division. It's starting to happen. And right now, I think it's pretty safe to say that the government, let's just call it that, the presidency, going for midterms, they don't want to have the stock market down 30% like it is right now, the NASDAQ at a new 52-week low, because people are going to look at that and they're going to say, hey, what do we expect another year from now? The markets to be down 60%. A lot of people don't understand the markets and how they work. They simply look at their portfolios or 401ks and they see, hey, this has happened since Democrats took office. This is not good. We're going to vote Republican, right? So it's in the government's interest to actually make the stock market at least recover a little bit heading into midterms. That could play a role to the Fed's decision on what they do as far as raising rates, because the Fed is not a part of the government. The Federal Reserve is its separate entity because it doesn't want to be influenced by politics, or it shouldn't, to give you the most prosperous economic conditions, right? But it's definitely influenced by what the president says or what the person in charge wants to happen. Just like Trump, 2018, he told the Fed to stop raising rates. They stopped raising rates. The markets bottomed on Christmas Eve of 2018 and then went on a parabolic rally, right? They do listen to the president, whoever's in charge of things. So that's going to be very, very important. That's obviously the biggest catalyst of this week. Tomorrow will again be very, very big as well. And we do have earnings on Friday. JP Morgan, Morgan Stanley, Citi, United Health Group, Wells Fargo, US Bank Corp, PNC, First Republic Bank. All of these guys will be reporting earnings on Friday in pre-market, and that will definitely move the markets as well, because you want the banks to be healthy if at all possible, right? So there you have that information, and I think that will be very, very key as well. And then you have this, the AMC warns short sellers of possible APE short squeeze. Says AMC has released a report warning shareholders from the risk of buying APE shares as the company gets ready to sell up to 425 million shares. However, the report also warned short sellers of the possibility of an APE short squeeze. APE traded below $2 on Friday despite strong shareholder sentiment. The equity has an average trading volume of 19.8 million, but has traded lower in the past week. As the markets continue to tumble and short sellers double down on their positions, stocks such as AMC and APE also continue to take the heat, but short sellers could be in for a big surprise. All it takes is coordinated heavy trading activity to trigger massive price fluctuations, at least according to AMC Entertainment's statements. And that's the thing. If we do get these 425 million shares that are raised in a timely fashion, and we do get a good CPI, right? Let's say CPI does come in much lower than expectations. Doesn't look too likely considering what's happened just to the price of gasoline and oil. But nonetheless, if that happens, the Fed U-turns, takes a soft pivot stance, or anything along those lines to give us a bullish reaction in the markets, which will not take much when you are at a fresh 52-week low. At the same time, you start to get a lot more people that are excited about AMC, that you start to cause a short squeeze, and the markets are giving you a positive sentiment. You could really see shorts squeezed out of their positions in a big way, and I don't think a majority of the action would actually happen in APE. I think a lot of it would actually take place in AMC stock. And I think here in the short term, the levels we have to break are the 50, 100, and 200-day moving averages. Good thing is the 50, 100, 200-day moving averages, they're very close to each other. So the 100-day moving average is at $9.09. The 200-day moving average, the furthest up moving average, is at $10.19. So or 17 cents. So if we can just break out above, $10.17 per share, which granted is about 66% away from where we currently are right now. It's a big percentage, but it's not that much as far as actual dollars. Then that's where you could get very, very parabolic. But I don't necessarily think that would happen if the markets were just, down 2 to 3%. On any given day, right? AMC is probably not going to be that standout performer, but if you do get the markets changing sentiment and you do get people excited about AMC for the prospects of, selling these shares, raising money, whatever the case is, that's where you could possibly start to get back up to $18, $21 per share. Some of these key levels that we have had drawn out on this chart for a while, because just even back in August, 2 months ago, we were at $17 per share. Now you're sitting at $6.15 per share. And I think that in and of itself presents a very big opportunity to potentially go long over the next couple of months on AMC, especially via the options. In my personal opinion, no matter which way it goes, we're going to see a decent bounce by the end of the year, if not just full on short squeeze and the MOAS, right? Either way it goes, I think you're going to see a Fed soft pivot, and that in and of itself is going to cause a market-wide short squeeze when hedge funds really have their lowest net long exposure that they have ever had. There is the most little long exposure to equities, meaning that hedge funds would profit the least right now out of history if the stock market actually went up. Hedge funds, they're betting the markets will continue to go down. If they're upset in that big of a degree, they're going to rush to get out of those short positions in a very timely fashion. So I do think if we get a small short squeeze, potentially without the markets playing along, we're probably going to find some resistance around $9 per share. That's still like 60% upside, like I said, or 50% upside, give or take, even back to $9 per share. I think that's really the range that I would target. If we do get a market-wide short squeeze, then I think, $15 to $20 per share, $21 per share, this line up here is definitely not off of the table. Like I said, if you get a market-wide short squeeze, because after all, even in 2022, we've been over $21 before. We were just to this level back in March, and yeah, it was 7 months ago, but in the grand scope of things, the situation has gotten a lot worse, but it's also gotten a lot better at the same time because we've been through so much pain. You're closer to the end of this pain, either way you put it at this point, than you were 7 months ago. Historically speaking, the average time the stock market stays down over 20%. So hopefully that makes some sense to you guys. Hopefully you guys realize this is probably a good time to be bullish on AMC. especially on something like AMC that has a high short interest, a lot of community backing behind it. That's where I would put my money personally if I was going for a trade over the next couple of months. But even in the broad markets themselves, I am very bullish on what I have been seeing. As far as the technical oscillators, indicators, you are seeing the RSI extremely oversold and the MACD, which is in firm bearish territory as well. That is, indicating that you probably should see a bounce at some point over the next couple of days, next couple of weeks. Nonetheless, the option activity on AMC stock for the day is 73% positive order value, 2 orders totaling $75,000. So not too much activity right now. You're definitely seeing some shorting activity today as we do head into those major catalysts coming tomorrow. Now, the live short interest of free float sitting at 19.24%, so up about 0.33% on the day. You do have about 99.17 million shares that are currently sold short, with a cost to borrow max at 30.58%, cost to borrow average at 25.38%, and cost to borrow minimum at 20.14%. Guys, so we covered a lot of information here in this video. If you guys have questions, if you want anything broken down more specifically, then let me know down below in the comment section. In the meantime, hit the like button, subscribe to the channel if you guys have not already. Get your free stock down below in the description of this video with Webull, Moomoo, and Public as well. Thank you guys for watching. I will see you in the next one.